As I mentioned there, at a stage the S&P was up 3% following news that the US and China are cooling their heels a bit when it comes to tariffs. Is that still the case, Tom?
It is, Pete. In fact, the S&P 500 ended its session with a gain of 3.2%. So that's the highest level since the early part of March. The Nasdaq up by a more emphatic 4.3%. So to your point, it turns around the agreement that was struck at the weekend, Pete, in Geneva between the United States and China. The agreement spans a period of 90 days, which will see Chinese tariffs or imports tariffs on Chinese imports into the United States, that they will fall from 145% to 30%, and China will drop its levy to 10% on US imports. So a major breakthrough for investors. It's a 30-day period, so it remains to be seen as to its ultimate durability, but there was no question that this was seen as a massive positive for US investors in particular. There were gains across the board for US markets. So the KBW Bank Index, as the name suggests, the measure of banking performance, was up by 4.3%. You saw the leading financial institutions, Goldman Sachs, Morgan Stanley, Wells Fargo, JP Morgan, up in the order of 3 to 4% there. The Philadelphia Semiconductor Index, Pete, the measure of chip maker performance, up by 7%. The leading names in that index were up by about 12%. So it was a tide that lifted most boats. So it's a question to what extent that now flows over into the regional picture. We're seeing futures in Japan up by about the better part of 3%. The Taiwanese futures up by 2%. The ASX 200 futures, the SPY, is up by a little over 1%. So the only downside for our own market is that this saw the US dollar surge, and that has created a headwind for some, not all, commodity prices. But gold prices, for example, have fallen by the better part of 3%. Oil has surged up around $63.50 at one stage, pulled back to $62, which is a gain of about 1.5%. But commodities could be the weak spot for the local market today.
Okay, we'll talk to you in a few hours' time, Tom. Thank you.